Hey everyone, welcome back. Today we are talking about something that is going to shake up everything you thought you knew about accounting. I am talking about the death of double-entry bookkeeping. Yes, you heard me right. That 500-year-old system that started with a Franciscan friar in 1494? It is finally being replaced. Not improved. Not upgraded. Replaced. By artificial intelligence. By neural networks that can categorize transactions in real time. By continuous algorithmic validation that makes the monthly close as outdated as a fax machine. So grab a coffee, get comfortable, because we are going to break down exactly how modern AI automation is dismantling the old ledgers and what that means for you, your business, and your career. Let me take you back to the year 1494. Columbus had just discovered the Americas a couple years earlier. The printing press was still new. And a guy named Luca Pacioli, who was a friend of Leonardo da Vinci by the way, wrote a book that summarized the double-entry bookkeeping system used by Venetian merchants. That system had debits on the left, credits on the right. Every transaction had to balance. For 500 years, that has been the untouchable gold standard of global finance. Every business, every bank, every government used it. And why not? It worked. For a world of spice traders and handwritten ledgers and slow-moving commerce, double-entry was a miracle. But here is the problem. We are not in 1494 anymore. We are not even in 1994. We are in 2026. Your business probably processes more transactions in 1 hour than a Venetian merchant processed in his entire lifetime. And double-entry bookkeeping, with its batch processing and month-end closes and manual reconciliations, is cracking under the pressure. Let me explain what I mean by batch processing. Most traditional accounting systems wait. They wait for the end of the day, or the end of the week, or the end of the month. Then they take all the transactions, dump them into a big pile, and start reconciling. This is like a restaurant that only cleans the dishes once a month. By the time you find a mistake, it is weeks old. And in that time, that mistake could have multiplied. You could have made decisions based on bad data. You could have paid the wrong vendor. You could have missed fraud. Meanwhile, AI does none of that. AI works in real time. The moment a transaction happens, the system sees it. The moment an invoice arrives, the system reads it. The moment something looks suspicious, the system flags it. There is no waiting. There is no batching. There is just a continuous, flowing stream of data that is always being validated. That is what we call continuous algorithmic validation, and it is a complete game changer. Now let me get a little technical for a minute, but I promise to keep it simple. In traditional accounting, a human has to look at a transaction and decide where it goes. Is this a debit to office supplies? Is it a credit to cash? Is it accounts payable or something else? That takes time. That takes training. And honestly, it is boring. But AI does not think that way. AI uses something called a transformer-based neural network. Sounds fancy, but here is what it actually does. It looks at the context around a transaction. For example, if you get a charge from a company called Zoom, the AI does not just see Zoom. It sees that you have a contract with Zoom. It sees that your team uses Zoom. It sees past transactions categorized as software subscriptions. It might even see an email about a pricing change. And in a fraction of a second, it says, "Okay, this is a software expense." No human involved. No chart of accounts lookup. No debating whether it goes under communications or technology. It just knows. And the more transactions it sees, the smarter it gets. That is what we mean by fluid, self-correcting data streams. Let me ask you something. When was the last time you actually drew a T account on a piece of paper? For some of you, maybe it was in accounting class. For others, maybe never. But here is the truth. The T account, with debits on the left and credits on the right, is a teaching tool. It is not an efficient way to run a modern business. Because in the real world, a single transaction touches more than just two sides. Think about an e-commerce sale. That one transaction involves revenue, inventory, cost of goods sold, sales tax, shipping fees, payment processing fees, and maybe even a discount code. Double entry forces you to split that into multiple journal entries. It is like trying to describe a movie by drawing stick figures. AI does something completely different. It creates multidimensional data nodes. Each transaction is a rich object that contains all of its context. Revenue, taxes, inventory changes, compliance flags, everything. And those nodes can connect to each other in ways that debits and credits never could. So instead of asking how do I balance my books, you can ask what is my real-time profit margin by product, by region, by marketing channel. That is not bookkeeping. That is intelligence. Here is something that does not get talked about enough. Traditional accounting is obsessed with the past. Your profit and loss statement tells you what happened last month. Your balance sheet tells you what you owned last quarter. That is like driving a car by only looking in the rearview mirror. AI flips that completely. Because your data is live and continuously validated, you can start predicting the future. What will my cash flow look like 2 weeks from now if I pay all my vendors today? Which customers are likely to pay late based on their behavior patterns? Where is the next dollar of fraud most likely to come from? These are not guesses. These are predictions based on real-time data. And they are only possible because you have moved beyond the old ledger. So when I say the T account is dying, this is what I mean. It is not just about speed. It is about a completely different way of understanding your business. I need to talk about something scary. In 2026, fraud is more sophisticated than ever. We are seeing deepfake invoices that look exactly like real ones. We are seeing synthetic identities that can pass basic checks. And traditional bookkeeping is helpless against this. Why? Because a human looking at an invoice sees what the invoice says. If it looks like a real vendor invoice, they approve it. But AI sees the metadata. It sees that the email came from a suspicious domain. It sees that the bank account number has never been used before. It sees that the invoice number sequence does not match the vendor's usual pattern. And because validation happens continuously, not just at month end, the system can stop the payment before it ever leaves your account. That is not just automation. That is protection. And it is one of the biggest reasons why businesses are switching right now. Now, if you are an accountant or a bookkeeper watching this, you might be feeling a little nervous. Let me stop you right there. AI is not coming for your job. It is coming for your data entry. And honestly, good riddance. The most talented accountants I know did not get into this profession because they loved typing numbers into spreadsheets. They got into it because they love solving problems, advising clients, finding efficiencies, and helping businesses grow. AI handles the drudgery so you can do the strategic work. But here is the catch. You have to evolve. If you are still clinging to legacy ERP systems and manual reconciliation cycles, you will become uncompetitive. Not because AI replaces you, but because other accountants who use AI will run circles around you. They will close the books in 1 day instead of 2 weeks. They will catch fraud instantly instead of finding it in an audit 3 months later. They will provide real-time forecasts instead of historical reports. So the question is not, will AI replace me? The question is, will I learn to work with AI or will I get left behind? Let me paint you a picture of the old way. It is the last day of the month. Your team is stressed. Everyone is staying late. There are spreadsheets flying back and forth via email. Someone forgot to record a depreciation entry. The bank feed is not matching. You are manually checking off transactions one by one. It takes 3, 4, sometimes 5 days to close the books. Now here is the new way. It is any day of the month. You open your dashboard. Everything is already reconciled. Every transaction has been categorized and validated in real time. There is no closing process because the books are always closed. This is called the live close. And it is not science fiction. It is happening right now in companies that have switched to AI-driven accounting. The stress is gone. The overtime is gone. The errors are gone. And you know what replaces them? Insight. Strategy. Time to actually think about where your business is going instead of where it has been. Let me give you a real example so you can see how this works. Say you run a small online store selling handmade furniture. On a normal Tuesday, you get 50 orders. Each order has a product, a shipping cost, a sales tax amount, and a payment from Stripe or PayPal. In the old world, you would wait until the end of the month, export all your Stripe data, export all your Shopify data, try to match them up in Excel, and then manually create journal entries. This takes hours. And you almost always make a mistake somewhere. In the AI world, the moment an order comes in, the system recognizes it. It knows that product A has a cost of goods sold of $40. It knows that shipping to that zip code costs $12. It knows the sales tax rate for that state. It creates a single data node that captures all of that information. And when Stripe sends the payout a few days later, the AI automatically matches it to the original orders. No manual work. No errors. And you can see your true profit per order instantly, not 30 days later. That is the power of neural categorization combined with continuous validation. I want to be very clear about something. This is not just a faster version of double entry. This is a completely different structure. Double entry was built for a world of paper and physical ledgers. It assumed that transactions were rare and that humans had time to record them carefully. AI is built for a world of APIs and real-time data streams. It assumes that transactions are constant and that machines can handle the recording instantly. Trying to force modern commerce into a double-entry framework is like trying to force a Ferrari to run on hay. It might technically move, but it will be slow, inefficient, and constantly breaking down. The businesses that thrive in the next 5 years will be the ones that abandon the old structure entirely. Not because they hate tradition, but because they love winning. So here is my challenge to you. Do not just watch this video and nod along. Take action. First, open your accounting software right now. QuickBooks, Xero, FreshBooks, whatever you use. Look at the uncategorized transactions. How many are there? How old are they? That is your evidence of a broken system. Second, ask yourself how much time you or your team spend every month on manual reconciliation. Be honest. Add it up. That is time you could spend growing your business or serving your customers. Third, start researching AI-powered accounting tools. There are many out there. Some are add-ons to existing software. Some are completely new platforms. Try a free trial. See what it feels like to have your transactions categorized automatically. I promise you, once you experience it, you will never want to go back. Let me leave you with this. The 500-year reign of double-entry bookkeeping is over. Not because someone decided to be disruptive for fun, but because the economy outgrew it. We needed something faster, smarter, and more secure. And we found it in AI. We found it in neural networks that learn your business. We found it in continuous validation that protects your money. We found it in data nodes that see the whole picture, not just two sides. You can either be a passenger on this change or you can be a driver. I know which one I am choosing. And I hope you will too. Thank you so much for watching. If you found this video helpful, please hit that like button. It really helps the channel. Subscribe if you want to stay ahead of the curve on AI, automation, and the future of finance. And comment below with the word ledger if you are ready to leave the old ways behind. I read every comment. I will see you in the next video. Until then, keep building, keep learning, and do not let the past hold you back. Take care.